Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to go over Roblox earnings report. Now they beat on EPS and they beat on bookings as well. Remember, revenue is important, but not that important for Roblox. Bookings more important. Now, as for Roblox, we did have an update video not so long ago talking about the December metrics and whether or not 2023 might actually be a growth year for the company. 2022 was more an investment year for the company, and that's why they're basically cash flow neutral for fiscal year 2022, which again should be something positive for 2023 if things continue in the right direction. Now, overall, of course, Roblox exploded onto the scene during the pandemic. Everybody was staying at home, so kids were playing on Roblox, parents were buying Robux, which is the in-game currency. Then the fears of, everybody going out of the pandemic, so going more outside, not playing video games as much anymore. Of course, the stock needed to crash. And obviously, that's not all. Inflation, high interest rates crashed most growth stocks, and Roblox was one of them. Now, of course, we did want to see continued growth, and that's maybe during 2022 that didn't really happen that much or as much as investor would like. Now, this quarter, we actually see growth year over year, but also accelerated growth quarter over quarter, which was a big positive and maybe one of the major reasons why the stock actually, soared over 25% after they reported earnings. So we're going to go over all of that in this video. Of course, do share your thoughts down in the comments below. Are you a shareholder, or maybe are you a player, or are your kids playing? Let me know down in the comments below. If you enjoy these type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first of all, let's talk about the quarter and then the full year. So revenue increased 2% or 3% on a constant currency basis to $579 million. That's also an accelerated growth from the past quarter. Now, net cash provided by operating activities is a bit less, so that's $119.2 million, and free cash flow is negative $38 million. Now, bookings here obviously beat consensus, were close to $900 million. That's up 17% year over year and up 21% year over year on a constant currency basis. Average daily active users were 58.8 million. I believe that was flat quarter over quarter, but it's up 19% year over year. Hours engaged were 12.8 billion, up 18% year over year, and average booking per daily active users was 15.29, just down 2% year over year, or up 2% on a constant currency basis, which was not the case in Q3. So nice to see this. And then as for the full year, revenue was $2.2 billion, up 16% year over year, or 17% on a constant currency basis. Net cash provided by activities was $369.3 million. Free cash flow was negative $58.4. We're going to have a talk about that later. Bookings were $2.9 billion, up 5% or 9% on a constant currency basis. Average daily active users were 56 million, that's up 23% year over year. Hours engaged is up 19%, reached close to 50 billion hours. Now, average booking per daily active user, this is the longest acronym you can actually see, was $51.29. That's down 14% year over year, or down 11% on a constant currency basis. Now, of course, this is down because they are growing now in areas where monetization has not, peaked yet. And now as for the January metrics, so they always give us this extra month during the earnings report. So the estimate revenue will be between $213 and $216 million. That's up 22 to 24% year over year. Estimated bookings were between 267 and 271 million, up 19 to 21% year over year. So still nice growth there. Average daily active users were 65 million, that's up 19%. Hours engaged is up also 19% to 5 billion hours. And then the estimated average booking per daily active users was between 4.11 and 4.17%. That's up 0 to 2% year over year. Remember last year, it's a easier, year over year comparison right now. Now, a couple of comments here from the CEO. So he talks here about the bookings. Now, bookings accelerated meaningfully in December and January, with year-over-year growth exceeding 20% in both months. Growth was strong across all geographies and age group, but with particular strength among users above 17 years old. As bookings reaccelerated in late 2022, we saw immediate improvements in adjusted EBITDA margins, For the full year, we were able to make important investment in infrastructure and trust and safety largely out of cash flow operations. Now, I'll talk about a couple of things here. First of all, the user base, the age of the users here, 17 years old. Remember, during the pandemic, when we first covered Roblox, the, let's say, big fears or the points we had to look out for is whether or not these younger users, 13 years old or under 13, were going to stick with Roblox. We're still going to play Roblox as they grow up. Clearly, the answer here was yes. Now, with regards to the investments, remember also, Roblox is not just a game, it's a platform. We've talked about that before. That's basically the major difference between Roblox and another traditional game. Now, they did say here during the earnings call that they believe they have passed 90% of their catalog now being user-generated content. We're well on our way to that being 100%, including all the avatars on the systems as well. So again, very, very good from a engagement standpoint. Then second of all, with it being a platform, they're proud to welcome the NFL, FIFA, Netflix, and of course Elton John and Mariah Carey. We have a lot more coming in 2023. What was the last one that we've seen? Was it Chipotle or something like that, which again was trending, was going viral. So again, this is reaffirming the point that this is not just a game, it's a platform to build upon. Not just me and you, but also huge, huge brands. And now with regards to the investment that they made, so they spent over $400 million over the course of the year. Those capital expenditures related to infrastructures will be down significantly in 2023, somewhere between 25 and 30% lower this year. Again, this is very, very good if you're looking at this year as a growth company standpoint, but also maybe as a more profitable company standpoint. Now, with regards to monetization of users, we've talked about this a couple of quarters ago as well. They're growing into regions where monetization isn't as optimal as in the United States. As they say here, they've seen incredible strong growth in strategic regions, so think Western Europe and East Asia. As an example, just in the month of January, within the strategic regions alone, bookings grew about 37%. And that's now becoming a pretty big part of bookings. Opportunistic regions, Latin America, Southeast Asia, etc., grew 23% in January. Of course, these regions right here aren't as monetizable as, let's say, Germany, France, or just the United States, Canada. And then going back to the age thing, so it's those age up users that they reference, 13 to 16, in particular 17 to 24 years old. And now we're seeing really interesting growth in substantial scales in the 2 and up over user base. So it really is strength around the world and strength in all age demographics and in particular age up. Also, the older you get, the more money you will have yourself to spend on the platform. That's not to say that you will spend suddenly thousands and millions of dollars on Roblox, but the difference between being a 13-year-old and a 20-plus-year-old is a 20-plus-year-old usually does not have to ask his parents to buy him Robux. He just pulls out the card and buys it. Of course, this can also be a creator, which creates a community. Community creates more and more users, more eyes on the game, etc. And then, of course, we have to talk about stock-based compensation. You guessed it, it grew year over year for this quarter and then for the full year as well. And then last two things, small reminder, April this year will be the last month that we'll get those monthly updates from the company. So we still have February, March, and April, 3 extra months that they're giving us. And then it will only be, Investor Day presentations and earnings report. Second thing, obviously, with regards to safety of the platform, a lot of people have commented on past videos and I've seen some forums as well. Of course, this being a platform, a game more focused on kids, then there's always this fear of, some people using this platform for bad things, and how will the company be able to provide the insurance to parents, to gamers as well, that this platform will be safe for kids. So this will always be a focus for them, something they will keep on working on. It's not one-time investment that will solve all the issues. No, this is a continued investment throughout the years. So just wanted to put this out there. And now quickly, last thing with regards to the graph, for those that like this segment, from an RSI standpoint, we're still fine. MACD, still bullish under 0. Now, with regards, this is, by the way, the weekly chart. Big green candle this week, obviously, thanks to the earnings report. Now, positive thing is that the last 2 times we tried to go over the 200-day moving average, we clearly failed. This time, we're well over it. Of course, on Thursday, we had a red-ish day on Friday. Currently, we might see another red day, but I don't think it will be so red to take this candle under the 200-day moving average. And so I would like to see maybe next week a normal candle, maybe to reaffirm ourselves above that 200-day moving average. If next week is a disastrous week, then you might see one of those red candles there that will take us back under the 200-day moving average, which isn't such a positive sign. So to conclude, it's nice to see that growth is accelerating quarter over quarter, year over year as well. So that's always great to see, reaffirms the bullish thesis on the company. Now, the only thing here is continued execution. What happens with profitability in 2023? Can they be a bit more profitable this year? Remains to be seen, of course, in the current macroeconomic environment. High inflation rates, we've had the PPI report, CPI report. Let's see what the Fed does with those numbers at the next meeting. But of course, I would like to hear your thoughts down in the comments below. What do you think about this quarter and maybe the projections for this year? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.